Imagine you have 150 million pesos to invest. You're looking at two options. Option A is a brand new, ultra-modern spec home in a trendy new village. It's shiny, it's 2026 fresh, and it's priced at 280,000 pesos per square meter because the developer already took their cut. Option B? It's what I call the old money estate. It's an original 1980s build in the best phase of an exclusive village. The curtains are dusty, the tiles are retro peach, and the seller is a grandchild who just inherited it and wants a quick exit. Because the house is ugly, they are listing it at 180,000 pesos per square meter just to move the dirt. Most people, the ones who buy with their eyes, will choose the shiny new house. But the 1% who build real generational wealth, they are buying the dust. They are buying the 30% secondary market discount that the old money houses are practically begging you to take. Today, we are going beyond the paint. I'm going to show you why old money houses are the single best investment play in 2026, and how you can manufacture 40 million pesos in equity by knowing the math that everyone else is too distracted to see. My name is Remy from REMClub, and I educate the average Joe, real people, just like you, the intricacies of real estate in Southern Metro Manila. If you're someone who is looking to learn more about real estate, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. It's early 2026. The interest rates are finally easing to 4.5%, and mortgage affordability is bringing a wave of new buyers back into the market. But while the crowd is fighting over oversupplied condos, the real alpha is in the horizontal market, the land-scarce, exclusive villages where they aren't making any more dirt. The psychology of the inherited exit. Here's what most people don't realize. Buying a luxury home from an individual is a completely different game than buying from a developer. Buying from a developer is like buying a car from a dealership. The price is fixed, the profit is baked in, and you pay a premium for the new car smell. Buying an old money house is like finding a vintage Porsche in a barn. The person selling it doesn't always know its worth, or they simply don't care because they didn't pay for it. In 2026, we are seeing a massive wealth transfer in the Philippines. The original owners of the 70s and 80s are passing these estates to heirs who would rather have liquidity than a sentimental 1,000 square meter lot in Alabang. This is where it gets really interesting. These sellers are often motivated sellers. They see the 25% vacancy rate in the condo market and they panic. They don't realize that their land in a prime village is appreciating at 7% to 10% annually simply because it's finite. Because the house is dated, they price it 20% to 30% below the new build market rate. They are essentially giving you the structure for free and discounting the land just to get the cash. Challenging the modern premium. Now, you might be thinking,
But Remy, I want a modern home. Why would I buy a 40-year-old house with plumbing issues?
look, I get it. But here's the thing. You are paying for the bones and the boundaries. The math. 2026 realities. Option A, new spec home. 500 square meters at 280,000 pesos per square meter equals 140 million pesos. Option B, old money house. 500 square meters at 190,000 pesos per square meter equals 95 million pesos. You have a 45 million peso gap. Even if you spend 30 million pesos on a full gut renovation, using high-end 2026 finishes like Edge Zero Carbon certified materials, you are still 15 million pesos ahead of the person who bought the new house. And here is the kicker. Your house will actually be better because you chose the materials, you verified the structural integrity, and you didn't pay for a developer's 30% marketing margin. The redevelopment gold mine. While the condo market is in a recalibration phase, horizontal land in established villages is the ultimate inflation hedge. In villages like Ayala Alabang or Alabang Hills, these old estates often sit on massive double lots or corner parcels. We're seeing investors buy these old money mansions for 150 million pesos, tearing them down for 2 million pesos, and building a luxury home that sells for 300 million pesos. Look for houses that have been on the market for more than 150 days. In 2026, the average days on market for a correctly priced home is 60 to 90 days. If a luxury house is sitting for 150 plus days, it's usually because of aesthetic fatigue. The price is actually good, but the vibe is bad. That is your 40 million peso entry point. The Mathematics of Scarcity. Let's talk about why this is the best 2026 investment. Supply versus demand. New projects are slowing down. Developers slashed new launches by 60% last year to clear inventory. Land scarcity. You cannot manufacture another 700-hectare village like Ayala Alabang. It is a closed system. The secondary market gap. Currently, secondary market yields are averaging 4.8% compared to 4.1% in the primary market. Why? Because the entry price on a resale old money home is so much lower that your rent-to-value ratio is mathematically superior. Most people think they need to find a distressed property. You don't. You just need to find a distressed aesthetic. A house with an orange roof and 1980s grills is distressed to a luxury buyer, even if the foundation is solid rock. Real estate wealth isn't about being the person with the newest car in the driveway. It's about being the person who owns the driveway. If you are looking at the 2026 market and feeling discouraged by the high prices of new developments, stop looking at the brochures. Start driving through the older phases of the villages you love. Look for the peeling paint. Look for the overgrown gardens. Because behind those rusty gates is a 30% discount that the old money is handing to you on a silver platter. Make sure to subscribe so you don't miss our next strategy. My name is Remy, and I'm here to help you stop shopping and start investing. Next up, we'll explore how a converted garage equals 100,000 pesos per month. How to turn a garage into a legal studio. Remember, don't buy the hype. Look past the paint and buy the dust. I'll see you in the South. Go to our channel for full-length educational and data-driven videos on Southern Metro Manila real estate. Visit our website for a list of various curated properties in the South. Email us if you would like to buy, sell, or lease properties. Till then, we'll see you in the South.